Hi, and welcome to Investment Banking University, where we teach you how to become an investment banker. Today, we're talking about the very important topic of business school, or some of you may know it as an MBA, or a Master's of Business Administration. And we're addressing the question, what should you learn in business school? Now, this is going to be different than what you actually learn in business school. And we're going to talk about that a little bit, and we're going to touch on it in the course in Investment Banking University. So, since the perpetuity is the basis for both industry and the capital markets, it follows that business school should thus focus on educating individuals on, number one, the nature of the perpetuity, number two, the phases of the perpetuity, and number three, the different sides of the perpetuity. So the standard MBA curriculum at most business schools is broken down along siloed subjects such as accounting, finance, management, operations, and marketing, and attempts to teach individuals how to be a mid-level manager at a large corporation for the rest of their lives. And we are going to talk a little bit about why this is not feasible going forward, because unfortunately, these jobs are mostly gone, having been shipped overseas or automated. This MBA curriculum is thus outdated and not appropriate for the 21st century, when most individuals will have multiple jobs and roles throughout their careers and lives. The more appropriate field of study, which is yet to make it to business schools, is known as Perpetuity Science. Perpetuity Science is the body of knowledge, methodologies, and optimization models related to the building, selling, and buying of perpetuities. It explains how perpetuities can be built, managed, and exited from to create wealth. Perpetuity Science is a paradigm shift in business and finance education in that it replaces the siloed subjects traditionally taught in undergraduate and graduate business schools with a holistic methodology that integrates both industry and the capital markets into one framework. So instead of disparate business taxonomy along the lines of economics, finance, accounting, marketing, we have an initial taxonomy broken down in relation to the perpetuity itself. Namely, number one, build side, number two, sell side, and number three, buy side. The build side is for the building of perpetuities by entrepreneurs and corporations. The sell side is associated with the selling of perpetuities by investment bankers in Wall Street, and then the buy side is associated with the buying of perpetuities by private equity and corporate M&A departments. Within each of these three, we have various methodologies and optimization models that may in fact touch on the various subjects such as accounting, finance, and economics. But by starting with perpetuity science itself, the student can better synthesize the various moving parts of industry in the capital markets. So related to the nature of the perpetuity, when learning about industry and capital markets at first, one should first understand the nature of the perpetuity itself, which is the basis for industry and the capital markets. And a perpetuity is an asset with a benefit stream that extends into the future. So the perpetuity can actually be modeled with the following formula. Perpetuity value is equal to CF, cash flow, the benefit stream, over R, the discount rate associated with that benefit stream. So as we said, the CF represents the benefit stream associated with the perpetuity itself, and R represents the discount rate associated with the perpetuity's risk of receiving that benefit stream. Related to the phases of the perpetuity for number two, after understanding the nature of the perpetuity in general, we can then analyze the perpetuity within each industry, which stands for a company or an opportunity. So the nature of the cash flow, the R, the value chain, and the value being offered will be different. So we investigate each industry according to these variables by building an index for each industry and subsectors within that industry made up of public comps or public comparable companies. And so we've touched on this, and we touched on it in the course investment banking at Investment Banking University, but the phases of the perpetuity are broken down: number one, by syndication; number two, job shop; number three, perpetuity; number four, growing perpetuity; and number five, diversified. And we're going to go into each stage of the perpetuity and how there's a formula for each and how they change in the course. So number three, the different sides of the perpetuity, as we already discussed, are the build side, the sell side, and the buy side. And as we mentioned, the build side is associated with the building of perpetuities. The sell side is associated with the selling of perpetuities, and the buy side is associated with the buying of perpetuities. So to learn more about what you actually should learn in business school, definitely download the free book Investment Banking at Investment Banking University. at investmentbankingu.com. And then you can register for the course online. You can take it in a weekend format, or you can actually do a month-long training course. So we really look forward to working with you. Take care.